Good evening, I'm Giuseppe Basile. I'm the analyst and trader you can find at website www.vipstalkertrading.com. I also post regularly on Twitter using the @vipstalker nickname. Good evening, today is Sunday, it's May the 3rd, 2015. It's 10 minutes to 9 p.m. in Toronto. The market are opened and in this video, I'm going to provide you with the weekly review for the major markets. I follow 13 major markets, and I apply the Fibstalker methods, which actually take advantage of the existence of program trading and other classes of algorithms on price. And I also want to communicate to my followers that I've just launched promotion for my new session of the Fibstalker Methods Coaching Program, and you have my followers received an email already. I actually have a special exclusive offer for my newsletter subscribers. So if you want to get more information or want to get advantage of the exclusive offer, just subscribe my newsletter and I'll be happy to send you the offer. Let me give you a little bit more information about this. As you can see here, this is an offer only for the newsletter subscribers. Non-subscribers will not be able to get this offer. And this is my May 2015 promotion here for the coaching program, and you can read here the reason why you should subscribe, and there are three main reasons, and most importantly, the formula that I provide to you, how that is structured. And this is a 70-hour step-by-step video lesson based course. It's a coaching program indeed, it's not a course. So it has been designed to produce a transformation in your trading. There is content review, there'll be live reviews, there'll be live session, 8 modules, and so 8 live reviews, webinars of up to 3 hours. And I'm going to open up the way markets are actually influenced by algorithms, and there's a lot of my own research as well, so I'll explain you how price structure can be framed. I'll show you how measure moves and price in modern markets moves, and I'll show you how to identify several types, different types of setups. Risk and money management, of course, are very, very important. Particularly money management can be used to boost profits, and as I say, it can be used to reach objectives. I'll show you the 8 components that you have to have in a trading plan. They have all of them. They have to be defined, and I will also not only show you all these concepts, but also bring you behind the scene and show how I have arrived at them. And most importantly, I will show you my main research here. This is the Fibstalking timing technique, how to stalk market, and also advanced use of this technique in modern market for advanced timing. And there is much more in the program. I also offer 4 different bonuses that no one else will receive, and this is a $2,000 value, and it's something that I'm not going to offer in the future specifically. And particularly, I'm offering the Fibstalker intraday system, which I'll start teaching in September. So if you're interested, here you find the price, and I've added a link to this page from the newsletter, and you can go and read all the details here. All right, thanks for staying here, and let's dive into the market now. So what you see on the screen is the daily chart of the euro, and when we go back to the weekly, you will remember the way I modeled this market from highs to lows here, and the lows are those that we saw back in 2010. So you can see very large time frame here, and price responded to that 139.70 level here. Went into the first target, as you can see here, 108.90, and just around that first target, it started moving laterally and eventually start moving higher. Now, will this market move higher? Well, I told since the last few weeks where I would have seen this market going, and that's the same choice I've been giving you well in advance, with 2 months in advance here. So as you can see, market went last week into that 111 level, and of course a lot of newspapers and news websites are talking about higher prices. The reality is that algorithms will not press this price higher until at least price gets into 113.41. But the most probable outcome is that this market starts moving lower again into the second target of that measure move that I've showed you before. And so if I remove this, as you can see, the first target is 108 here. The second target of this measure move is 093 here, which might look to you very aggressive, but it is what it is, and that's what the market are looking for to push this market. Now, if price continues to react at this 111.71 area of resistance, the price will keep moving lower into 101.22 and eventually 095.77, and that would bring price very close to that 093 level. Okay, so that's what we are going to look at in this market. And when we look at the 15 minutes here, we already had the fibs talking timing offering us an entry here, and we can see we can model this in different ways, but we had one measure move here, and we had a second measure move here. The first target was not hit. So, but when we study the sequence of measure move on the smaller time frame here, which I only show to my newsletter subscribers, my course subscribers rather, we can see that the sequence has been violated already, and it has offered a fairish trade here. Okay, so moving to the SP500, let's see what's happening in this market. This market has been as we know, it hit a first target from this 1960 measure move, which we identified with 6 days in advance here, and with the fibs talking timing, you are able to enter this trade, and eventually, after a few months, did take almost 5 months here to get into the first target. But eventually that's what happened. Now there is the possibility for this market to continue higher, of course, because this is an extension, so there are higher there's a second target above that there's a second target above that that we can see here. There is this first target, and there's a second target, the 21.94. That would be the second target of this measure move. There is also a first target of this larger measure move, and you can review previous review in order to understand what I'm talking about here. Moving to the daily. The dollar index here, the dollar index have been correcting, and that correction has started, not surprisingly, it has started in correspondence of this extension shot that I've mentioned now since some time here. And what happened is that this market is correcting now quite aggressively, and I've identified a potential area of an area of potential support. And I also mentioned that when we will get there, that could be an indication for a continuation higher of the dollar and a continuation lower for the euro. Now, as you can see, 95.50, it's a level that is trading at the moment. The market pierced into this area here, but the 94.25 was not pierced on the downside. So what can happen in this market now is that there is a continuation higher. If 94.26 is pierced on the downside, there is going to be another extension long just below that level at 93.55. Moving to gold. Gold has been moving laterally now for almost 2 years here. On top of what? On top of a potential area of participation from program trading long, which is traced from lows in 2002 to highs here. We saw participation at this 12.29, 12.30 here, once, twice, and price dipped into this area, and then again there was a reaction here, and again price dipped into this area and showed another reaction. Now at this stage on the daily, we can see that bears are in control here. As we can see, the move lower here, which started 12.25, has pierced to 111.75, and we can see very clearly here that there is a class of algorithms which is pushing this price lower, and this price could actually continue. Now it's still into this area of potential support, so I would not anticipate that as the high probability event, but we also have to remember that gold in the last 2 to 3 years has been linked to the ECB balance sheet. Now, if you ask me why, I won't be able to explain you this. I'm not into intermarket relations, and I do not understand those, and I do not believe in those as well, because those relationships change quite frequently, so it's not something I can use in my own trading, and I believe you should not do either. But also it requires a lot of discretionary decision and consideration, which is not exactly my style. And because of that, though, there is the possibility, because of this link with the European balance sheet, European ECB balance sheet, there is a possibility for this market to just continue lower now that the euro could be in a potential reversal. So moving to the US versus Japanese yen is another interesting market here, and we know that on the daily, and this is a weekly time frame, but this can be seen on the weekly as well. We had this extension long, which is a daily move, because on the weekly we have our algorithms, classes of algorithms who are waiting, which are waiting for lower levels to be tested, and that would be our 112.90 level here. Before it was 112.70, but we saw slightly higher highs here in mid of March, and so the level has gone higher as well. Now recently what happened is that, and we can see this on the weekly as well, we had from lows to highs, there was participation around this area starting at 119 and ending at 118.23 here, and we saw participation a number of times. This area has been tested. If price went below 118.23, we would see a retest eventually of this 116. That does not happen yet. So when we move to the daily time frame, we can see that every time price came into the second target of a previous measure move, it reacted, and actually what we can see here is that second target lines up with this 50% level of the new measure move higher. So This is what we have in this time frame. And I've just adjusted, I only adjusted here the scale. This is what we have in this market, right? So clearly on the daily, this market is still pushing higher, and recently, as I mentioned already on the weekly time frame, we saw this price actually reacting to this 118, 119 level here, area here. First test, second test, we had a number of 1, 2, and 3 tests here, and additional other tests here. So this level looks solid, and you remember that there is another proprietary pattern here that I mentioned in the past as well, and this is showing strength of this level here. So there is a possibility for this market to continue higher and go and test again those highs. However, the weekly is neutral in this market, so the daily alone cannot produce strong move highers. Clearly, though, if the US dollar inverts the March, actually this market could actually continue higher from these levels, getting into the first target from this level plus the first target from these levels as well. Moving to the euro versus the Japanese yen, this market is actually benefiting from the strong move that we saw in the euro as well. So when we go back to analyze this market, we know that this market has the potential to go back into the 122 level here. If you don't understand this, just go back and review my videos, and this will be very clear to you. Now, so to me, this rally here is just profit taking, or it has been somehow helped by the money that has actually flowed into the basically out of the dollar and into the other pairs, including the euro here, and so you remember that I mentioned a potential level of an extension here, and when we use this level is not enough, has never been tested, so it's an inner level, and we can see that level from the 4-hour, that's and from the daily as well. When we move to the daily, we can identify that level, and if I remember well, I've been using this level here. So as you can see, this level here has found participation at this 136.32 and brought price into first target. So the price has come out up, and we know that when the first target is hit and the second target is not hit in an extension, then our rules show us that we have to trace again. And as you can see, there was this retracement of 90% of the previous move, but now price is into that 134.31. So the short here is still valid, and as you can see, the first target of that short lines up to that level, the 122 level that we are looking for. So to me, the short here is still valid, and a lot of people saw this tremendous move higher, and then now they think that this market is necessary to continue higher. I don't believe so, and even if that happens, and actually if price gets above 136.22, 24 there, I don't believe that, but if that happens, there will still be another short level above that, the 137, 138 level there. So I don't think market will get there, although the market can do anything, and that's the reason why we identify levels, and then in my methodology, which I also teach in the Phipps Talking Method Coaching Program, I use the Phipps Talking timing procedural technique to test these levels and also enter and generate very quickly free risk trades. So that's the right way to trade, and protect your capital, because once you protect your capital, when you are able to enter a trade and you have protected your capital, when the trade works, you'll make money, and that's the philosophy behind trading the market successfully. Because if you assume that you know what the market is going to do next, you are in for very bad surprises. So this is for a continuation lower here into that 122 level. Moving to the pound versus Japanese yen, this market, when we look at the weekly time frame, we know that the next measure move in this market is actually again this 173.30, and again this market has been rallying because of because of the rally in the euro and pound, and but that doesn't mean that this move is completed. And now when we trace the full all the way halfway back here, we see that that level has been pierced, but that doesn't mean that this market cannot continue lower. Of course, we would have tried to use that level for timing. That has not worked. The 184.07 has been pierced, but that's not an indication for higher prices, because the level where the weekly time frame is interested in pushing higher, this price is 173.30. So if you got short at this point, you should keep the short. 82.34 to 173, it would be a 900 pips here. So this would be a good trade here. Keep it until you get into 173.30. Moving to the pound versus the US dollar, this market also have been experiencing, of course, a move higher because of the strength of the euro, and we know that pound is somehow linked to the strength of the euro. We had this measure move here, and the next one has barely pierced here. Let's see, it's the level here, it's 154.94, and the high is 154.96. So there is a slight pierce here. However, this market was not going higher anyway, because there is nothing behind this market. It is pushing this market higher, as you can see here. So I believe this market can actually keep moving lower like the euro, and go and trade into that second level there, the 136.46. That would also be the previous lows in this market. So I think this market is following exactly what the euro is doing, and the tail will be next week, on the next 2 weeks, when we will know whether the dollar index continues higher or continues its move lower. Okay, so I think everything here it's well defined or well understood. There's nothing strange happening in the market here. Moving to the Australian dollar versus the US dollar, this market is on top of an area of potential support here, the 0.7921, again with the dollar resuming the move higher. If that's the case, the move lower here could actually continue, and in this market we saw something that could happen next week to the euro. We saw participation around this 0.7699 or 77 area here, which were pressing to first target and second target, as you can see, and then the next measure move failed. So there was no continuation in this market, but this market failed, and which means that the next level of support in this market is going to come from lows to highs here, and as you can see, that level has been tested already on Friday. It will be retested today. We will know whether this market is going to continue higher and trade into the next measure move short, which we know being well above these levels. And as you can see, if that's the case, see how beautifully these levels always line up. If that's the case, if this market will find participation 0.7802, the first target lines up with that 0.82 level that we want to see tested for a continuation lower to ensure, yes, for a continued move lower. So very interesting market. Congratulations to those who took the long here. That was an ambush setup. So that's the kind of setup that you learn in the coaching program as well. Moving to the New Zealand dollar versus US dollar. This market has been moving higher, and again, when we go to the weekly, we were looking for a retest of this 0.7791. Now, will that be retested? Well, we don't know that because now the new cycle of the higher prices for the US dollar has started. It doesn't mean that that level cannot be tested. If the last 3 weeks are showing the highs, it means that the actual level that the program trading is using, it's a little bit lower there. So it might either be this level here or even safer this low here. So this could only be identified after the fact, but could be identified after the fact 2 weeks ago as well. So if the market gets again into this level or the higher level, that's an entry, of course. It's an entry short, and of course this market has to test the old halfway back here, the 0.7460. Moving to the US dollar versus Canadian dollar, this market came back obviously into that area that we have mentioned before. Why was that area important? But very simply because the market, the algorithms move these markets in trends and in waves, and then when there are retraces, in this case we identified this participation 106.73, and price went into the first target and second target, and then after the second target, after the market hit this 50% important 50% level, there was participation to downside. Into what? Into the next measure move long, which starts from this level and can be identified like this. And as you see, only when price got into that level, there was an initial reaction, not before, just that level. That's the important level, the important area as well. So if we retest this area is very important now, because if the market respects this area, we're going to see higher prices for the dollar versus the Canadian dollar, which could be a good med for the Canadian economy. For sure is going to be good for the Canadian property market, which in 2014 was the strongest in the world. There were a lot of billionaires coming and buying in Canada as well. I think there's one property, just the record, was reported to be sold for 147 million. And one of the reasons for this is the lower Canadian dollar compared to the US dollar, and also other currencies. So this is the reason why. So if we get below 118.78, we're going to see lower prices for the Canadian dollar, which means that lower prices for the US dollar versus Canadian dollar, so higher prices for the Canadian dollar, which means that the US dollar move higher, it's basically completed. I don't believe that's the case, but the market will tell us. We don't have to guess anything here. The market is always showing us the way, and we use the flip stalking timing technique to take advantage of those opportunities. And the next one is the euro versus the Canadian dollar. I mentioned back in May, end of May here, 2014, that we would see at least the price moving into this all the way halfway back here, which was from from May here, it was from 148 to 138, so 1,000 pips. And eventually the market got there. There was a participation on the upside, and then a continuation lower, breaking that level. So when that happened, we knew that there was not really a lot to do in this market. Now, this market is like all the others, is correcting, is continuing the correction, and now there are levels that we have to consider, and those are important to understand what's going on here. Also, this market might be correcting here, but as soon as the move in the euro will be completed, probably this market will continue lower. So now what we see here is that some of the traces show a move that is almost completed here. Another level that we can consider in this market is the 50% retrace here from the recent highs to lows. That's another level that we will need to watch. This market has nothing below price here and has all the potential to go back into the 121.24. By the way, that would be the second target of this measure move if that trades. So consider that the euro Canadian dollar is not going to move very differently from the euro US dollar, although the US dollar is gaining on the Canadian dollar. But they're going to move normally lower compared to the Canadian dollar as well. Finally, the US dollar versus the Swiss franc, we had an important development this week here. We had shorts breaking this level, which is very, very significant here. So you will remember that last week I mentioned the fact that there was already also in the weeks before, there was already a participation here from short, which broke price into the first target here. And in that process, and that's very important, in that process they broke the all the way halfway back here. Sorry, I had another trace there. So the trace that I had, sorry, they broke the highs to highs here, which is an extension. So the extension is not in place. It was in place at some point here, but then it was broken. So now this market is testing the all the way halfway back. So we will need to see whether this market continue lower into the second target of this measure move to 0.9809, in which case we will probably going to see a retest also of the 0.86. So if you're in a short, you should stay in a short. On the other hand, we have to study the behavior of this market now that it is at this 0.9292. If the market continues lower below the and reach the second target here, you can keep the trade into the 0.8658. If the market reacts, it actually we will need to see what happens when it trades in the old halfway back. So if it reacts here, it has the potential to go back into 0.9704, but the move lower will still be intact. So this market in a very, very large time frame is moving laterally, as you can see, and there might be nothing defined just yet. So what we saw is that there was participation at this 0.8658, and then the market went higher to previous highs, and then probably it's going lower to previous lows if there is no participation at these levels. And this completes my review for today. I want to remind you my Phipps Talker Methods coaching program. When you log in, this is what you see here. There is the main material of the programs, the main 8 modules here, and you actually You can actually browse the videos here with the duration on the side. These are the 8 modules. The module 0, which is an introduction, and then price structure, ambush trade setup, and program trading, the Fib stalking timing technique, and advanced Fib stalking timing. And then we get into the rules and trading method, the Fib stalker trading method and rules, the trading plan identification and validation. This is the full process for price analysis and price discovery. And of course, I'll help you formalize the Fib stalker trading method, and you can personalize the method based on the time you dedicate to trading, whether you're a swing trader or intraday trader, and a number of other settings you can have. And then I'll help you with the mental model to become a consistent trader. So the way it works is that when you come here, you just press on the image, and you have your video showing up here in a window, and then you can actually play the video here. So I'm not going to play the video now, but that's just a quick a quick demonstration of the material here, and there will be, of course, live webinars, one-to-ones, and all the other free bonuses that I've offered in my in these May promotions. Thank you very much for watching, and I look forward to work with you in the Fib Stalker Methods Coaching Program, and have a great week. Bye bye now.